Let's look at GST refunds and liabilities. A firm will have a GST liability when the amount of GST it collects and charges customers is more than the GST paid or charged by suppliers. So, for example, here's our GST pot or pool of GST that we owe the government. That's a liability. Let's assume during the month we collected the following amounts of GST: $100, $300 and $200. So added together, we owe the government $600. As we learn though, the government lets us offset all the GST we've paid during the month. So let's assume we paid 50, 50 and 100. It's a total of 200. We get to take out from the 600 we owe the 200 that we've already paid. So therefore we owe the government $400. So looking at the equation at the top of the screen, the GST collected was 600. We paid 200, so therefore our liability is only $400. How would this be shown in the balance sheet? Well, whenever we owe anything, that's an obligation, so it will go under liabilities, and it's a current liability because it's always due within 12 months. Why is it a liability? Let's look at the definition. Firstly, there's a present obligation. In this case, we have to repay the government the GST that we owe. Secondly, it arose from past events. In this case, all the transactions that included GST, so all the GST paid and received, etc., that does result in a final balance, and they are our past events. And lastly, it will result in a future outflow of economic benefits. In this case, we'll have to pay cash to the government. Let's look at the opposite situation. You can end up with a GST refund or asset. So in this case, when the GST collected is less than the GST paid, you're going to end up with a GST refund. So using an example, here's our GST pot again. Here's all the GST we collected during the month. We collected 100 and 200, so we owe the government $300. In this case, the business must have had a lot of expenses this period, and it's paid a total of $400 of GST. So we've only collected 300 but paid 400. We get to take that $400 back out. And in actual fact, the government will owe us money, which is called a GST refund. So looking at the equation at the top, we collected $300, but we paid $400, so we'll end up with a refund of $100. Where would that go on the balance sheet? That's a current asset. Again, it's definitely an asset. Why is it current? Because the government always settles this within 12 months. Let's look at the particulars from a theory standpoint. Why is it an asset? Well, the first characteristic is there's a resource controlled by the entity. The business has a legal claim for a cash refund from the government. The second characteristic is it arose from past events. All the transactions that involve GST were the past events. And lastly, there's going to be future economic benefits flowing to the entity. In this case, that'll be all the cash that the business receives.